Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is my friend Adam Button, the chief currency analyst and the managing editor at Forex Live. Adam, welcome back to Wall Street Silver.
Hey, good to be with you.
Yeah, it's great having you come down to Wall Street Silver. I want to get you on to talk about all the craziness that's happening in the markets, all the excitement that's happening in precious metals. First, let's start off with, what's concerning you right now, Adam, in the markets?
Well, I'm thinking a lot about obviously the same as everyone, Trump policy, and we have a new Treasury Secretary, and we've seen some significant dollar weakness since then. And I think that could be a real theme. And how I'm thinking about it is, Scott Bessent himself has said that the tariffs are sort of a threat. And even Steve Bannon is saying this, though he's not in the White House anymore, and that the idea is to get to achieve the goals without actually using the tariffs. And so one of the things the US wants to do, or all the things that they want to do, they can accomplish with a weaker dollar rather than with tariffs. And Bessent has talked about that himself. And of course, a weaker dollar would have major ramifications for precious metals and markets in general.
And when they say it's better for a cheaper dollar to fight compared to having high tariffs, don't they run the risk of like really, yeah, what's the risk there they run that if they do want to see the US dollar go lower to fight?
Well, it is. It's an interesting one. The dollar's very strong right now, as you know.
Right.
We're at some of the highest levels against Canadian dollar here. We're close to the best levels in 20 years. The yen is at near generational lows, though it's been stronger this week. Well, here's what they want to do, right? They want to have strong GDP growth, 3% plus. They want to bring the fiscal deficit down from about 7% of GDP to 3%.
Hmm.
They want to rein in the trade deficit to much lower levels, and they want to keep the stock market high. Now, you're not going to be able to do all of that with tariffs. You're not really going to be able to do any of that, perhaps, with tariffs. But if you weaken the dollar, at least in nominal terms, you can do a lot of those things, especially if it comes with, extracting trade concessions or perhaps forcing China to strengthen its currency. So, the main target of all this is China to get them to raise their currency. But you would see, say, for instance, Japan doesn't want its currency to get any weaker. A lot of places don't want their currencies to get any weaker. So you might be able to achieve some kind of global consensus. Now, the mechanics of actually weakening the dollar, it's a little bit of a difficult one because it's so huge
Right.
and so valuable. But if there's a will, there is a way there. And it would be a big shift. I mean, it's totally out of left field, but we have seen some dollar weakness this week since Besant was named as Treasury Secretary, and we do have the dollar at a very strong level. So if that were to become the playbook, naturally it would be really a game changer in a lot of markets.
Now, we talk about like, what's concerning you. I guess now what's giving you a little bit of optimism, like looking ahead in the markets, are you optimistic that we're going to see, new presidency change? Do you think that the cut in physical spending that they're planning to do will have any effect, or what do you see there?
Yeah, it's tough. I mean, when you're running a huge fiscal deficit, it's what's driving US growth right now.
There's about $15 trillion worth of physical gold in the world sitting there costing money rather than being used. It's just absolutely insane. Monetary Metals is bringing gold back into the financial world, putting gold to productive use right now. The problem with gold, of course, in physical form is that it's heavy, it's cumbersome, it's not particularly easy to ship, and it costs money to store in a protected manner. This platform Monetary Metals created is a proven concept and allows gold to be put to productive use. So instead of sitting there costing you money, it's actually in use earning you money.
Learn how you can earn 2 to 5% in our leasing program and how accredited investors can earn up to 12% on silver paid in silver. This advertisement is not investment or financial advice. Minimum investment applies.
Right.
Yeah, you can cut some regulations, you cut some federal workers, maybe you kick out some immigrants, and it balances itself out in the workforce. That's a fine line to walk. A
Right.
lot of the money that's being spent is things that you can't. A lot of it's like interest on debt, Social Security, Medicare, those kind of things that are not going to be cut. So at the end of the day, you know, I think of those four priorities I laid out, the deficit is probably the lowest one. It's not a pressing issue, though eventually it will be, and it will be a big problem for the US. But I think Trump cares more about the stock market, GDP growth, and improving trade, which can help GDP growth as well. So, I worry about all of those things, but when you look out at tariffs right now, I think that's the big question. And we had Trump come out at the start of the week and say, hey, we're going to put 25% tariffs on China or Mexico, Canada, and some on China as well. But and that 25%, obviously a big number, a bit of a shock, but the reason was drugs and illegal immigration. And right away, the market, well, not right away, but pretty quickly, the market said, hey, these are solvable problems. They don't have real economic cost to Canada or even to Mexico to shut down migration, especially through Mexico. Drugs, nobody wants that. So fine, we can spend a little bit more and tidy
Right.
that up. And then just last night, Mexico's president came out and said, hey, we had a good, or Trump came out after a talk with Mexico's president and said, hey, you know what? We heard some really good progress, blah, blah, blah. I fixed the border. So the sense I'm getting from it, and reading Trump is very difficult because he can
Absolutely.
change very quickly, is that he doesn't actually want to put these 25% tariffs on. And again, it goes back to that idea is the tariffs is the threat. And then maybe we get through this and we don't have any tariffs in North America. Um,
Right.
and so now you're seeing that the Canadian dollar has recovered all its losses since the start of the week. And
Hmm.
the Mexican peso is getting back on its feet as well. So, there is the optimistic idea here is now there will be tariffs in China, maybe a lot of the rest of the world.
Right.
It's maybe not heading to some sort of worst case scenario.
Now, where do you see gold going, I guess, now for the next year? Like I know we were talking about the US dollar and how it potentially could be going a lot lower in the near future, just for them to fight, I guess, China, and that will be a huge bolster to silver and gold. But I guess without that, where do you see silver and gold going? What's the fundamentals? What are you seeing?
Yeah, well, that's certainly not my base case that we get that
Yeah, of
dollar
course.
weakness. I think all else equal, barring something like Trump doing something about the dollar, it will go higher.
Hmm.
But the driver of gold has been China and Russia, really, and or the splintering of the world and the push away from dollars, weaponizing the dollar. It probably will continue. And I think even if it doesn't continue, I don't believe that China or Russia will look at 4 years of it not escalating as some sort of turn. And, Russia isn't going to be welcomed back into the rest of the world, and China will be a
No.
punching bag probably for the rest of my life. So it's in their interest in the long term to de-dollarize. Meanwhile, Chinese investors within China, you can't get your money out of China. So you have to either invest in real estate, which is a total dud in China
Right.
right
Yeah.
now. The Chinese stock market, which looked like it was coming to life in October and now has been washed out again, or you can invest in maybe some domestic bonds. But if you want
Right.
real capital appreciation, all that's really worked has been gold. And with this, disappointing run in the stock market, lack of stimulus there, it's going to be more and more money into gold. We'll wait and see how aggressive Trump policies are, and what it means for Chinese growth and the Chinese stock market. But I expect that money to continue to flow into gold. And we're right now at the start of a very strong seasonal period. December, January in gold is the strongest seasonal in any market that I know. And
Hmm.
it's worked year after year. So, I think right now you've got a dip in gold. And I just think it's probably time to take advantage.
Yeah, no, I totally agree with that. Now, Adam, this is it's such a huge pleasure having you come down to Wall Street Silver. But before you leave, I'd like you to quickly touch up on, the BRICS nations. Do you believe it's viable? Do you believe it'll be gold backed? Do you believe it'll even be successful?
I think, if you look at like the Euro project, for instance, it's a generational project. It takes, I think eventually if they want to have open trade or they want to have a trade pact within those countries, that's a big portion, certainly of population and of global trade.
Right.
And you start to be a counterbalance to the rest of the world. You look right now at auto sales globally, and you see Chinese auto sales are hugely penetrating the market wherever they're allowed to sell them. Now, if that doesn't include Canada, the US, Europe, you know what? There's still a lot of the world to sell autos into. And I think the BRICS are looking at it and saying, all right, if the US is going to throw up all kinds of walls, and we can throw up, if we all work together, we can throw up our own walls. So you have
Mhm.
maybe a trade pact. And then you start to do more bilateral trade. I don't know if it ever gets to the point where you're giving up monetary policy because it hasn't been that successful in Europe. and integrating into a single currency. I think there's just too many risks. So I don't believe we're going to see that. But I think the story is still the same if they trade with each other. I don't think we'll see a downfall of the dollar in
Right.
sort of a classical sense. But if they trade more and more with each other, it essentially accomplishes a lot of those same goals.
Yeah.
And certainly, gold would be backing a lot of that. You can see China wants to build its gold reserve. It's going to take, though, 10 years.
Yeah, I absolutely agree with you. It'll take a very long while. Adam, it's such a huge pleasure having you come down to Wall Street Silver. As always, thank you so much. Where can people connect with you before you leave?
Oh, thanks. Thanks for having me. Yeah, we're
Yeah.
at forexlive.com. We sort of write live about events as they unfold. Right now, we're just hearing about a breaking of the ceasefire in Israel. So, the
Really?
barely lasted a number of hours. So if something like that can be a boost for gold, we'll find out the details, early reports and whatnot. But, we cover things very quickly and live. And so if you want to see why a market is moving, you come to Forex Live, and we're writing about it very, very quickly. And we've grown a very big audience doing that and offering short, incisive analysis on what's moving markets.
I recommend everyone, please go check out Adam Button. Please go check out Forex Live. And anyone watching, please hit the like button, hit the subscribe button. And Adam, thank you so much for coming down to Wall Street Silver.
Thanks for having me, Ivan.
Awesome. Talk to you soon.